All right, I think we can go ahead and start. Okay, so welcome everyone to Sphere Partners' webinar. This is Reshaping FinTech in Times of Uncertainty and AI Innovation. We are going to be going over 3 topics today, namely a brief overview of the financial crisis and how it affects financial services, evoking corporate innovation during these uncertain times, and finally, identifying the skill gaps in FinTech currently, namely in AI and ML, and how to go about addressing them. We are very fortunate to be joined by 3 panelists today. Arad Liebertov, the CEO of Sunbit, Daniel Stein, the president and chairman of SuperSim, as well as our very own Katerina Korotkova, the director of product strategy here at Sphere. And with that, I will now pass it on to Katerina.
Great, thank you, Raleigh. So, and nice to see everyone here. So I'll probably let our speakers introduce themselves. So we'll start with Arad. Arad, will be great to get a few words about yourself and what you have been doing up to in the past, let's say, so 20 years of your career.
Sure, happy to do so, and thanks for having me. So I'm Arad Levertov. I've been in FinTech since 2008 and started my career with a company called Innova International, which is an online lender from Chicago. I think we used to do FinTech before it used to be called FinTech. And that's where I really learned everything about financial technology, online lending, and everything around this one. And then in 2016, I started the company Sunbit, which is what we call FinTech for real life. We provide 2 products. One is a pay over time product. Sounds like a buy now, pay later. People are familiar with this. But unlike many other buy now, pay later, which focus on online purchases, we are focused on what people care most, where they need to fix the car or go to the dentist or go to get eyeglasses or go to the veterinarian. We're active in more than 20,000 locations across the US, adding 500 to 700 every month. And our second product is Sunbit Card, which is basically bring a credit card, a debit card, and a buy now, pay later card, only one card, into the pocket and wallet of every customer, where we already process over $300 billion of transactions. I'm based in Los Angeles. Our company right now has about 500 employees and operating in the US. Thanks for having me again.
Fantastic. Thank you for sharing that. So we'll dive a little bit more in, I think, in the next parts of this webinar into your business, but then will be also great to have some introductions from Daniel, who also joins us here today. So Daniel, the floor is yours. It will be great to understand what you are up to.
Irina, thanks for inviting me over. Everyone, thanks for joining. Arad, good to see you again. My name is Daniel, and I'm currently in launching and leading and generally growing fintech based in Brazil called SuperSim, which means super yes in Portuguese. Prior to that, I had a career in investment banking, equity research, and then ran the majority of Innova's international operations from 2009 to 2016. And right now, I split my time between North America and Brazil. And I'm basically on my 4th venture in that particular country. It's a pleasure to be here today, and I hope to contribute and to learn from Arad that I haven't seen in a while.
Okay, so seems like we're connecting people. So great to have you guys here. So a few words about myself. So I have joined the Sphere about 5 months ago to help with the product strategy and portfolio. So in my experience, I had a lot of different corporates as well, working with financial services with such companies as Visa. I also worked for big corporations like Shell, BP, and I worked for smaller companies as well as also as consulting, and had my own also very own startup experience. So I guess I've tried it all. So I can relate to a lot what your path has been. And yeah, so I will be moderating the session today. And the idea is to go through key topics that we want to cover in terms of the fintech and the coping strategies in the fintech crisis time. And also cover the how technology can help us to advance in this field, right? So the first part we'll be talking about is the basically what is about the how the financial crisis looks nowadays, right? So what happens and what actually is the what is responsible spending nowadays. So what are the effects and long-term effects on the current state of economy on lending, borrowing, investments, and as also like as survival strategies. So I think it will be great to understand, guys, like how do you see the current environment affecting your particular organization? So perhaps Arad, you can share that, like how you guys are working with this at the moment in your company in Sunbit.
Sure. So I think maybe if I just take a step back and explain what does it mean the current environment. When you see what happened over the last kind of 12 to 18 months, you saw first high inflation. And, for people who, not necessarily understand what does it mean inflation, just prices increase significantly, which means the gas increase and the price of the gas, the price of the food, the price of the housing, everything increases. And this is by, only by definition kind of put some constraint on the customers. And then what happened in the last 12 months, the Federal Reserve significantly increased the interest rate in order to kind of slow down this price increase, this inflation. And now we are kind of in the in-between, when the interest rate is high, but also inflation is relatively high. And when interest rate is high, first of all, for all companies, not only for not specifically for financial technology companies, it impacts the cost of borrowing and the cost of the valuation of people look at valuation, because even like the formula of calculating valuation impacts. For financial services companies, especially dealing with lending and borrowing, like Sunbit and like other companies, it impacts even more, because our cost of capital, which basically is the cost of revenue, increases, right? So that's by definition, that's increases. And that means that we need to be even more efficient and more focused on doing the right thing. Saying that, it also impacts the customers, right? Our customers that need to go and fix your car. And, we are right now in about 40% of the authorized dealership in the US. When you fix a car, when you go to Toyota, to Honda, to Kia, there is to fix your car, there is 4 out of 10 chances you will see Sunbit. And now we are being more valuable for merchants and for customers that actually need to get it done. So we see more demand from customers that fix the cars. We see more demand from customers that are need to go to the dentist and then need to get a root canal. We see more demand. But the question is, how can we do it while also making good the margin, because our cost increases significantly. And that makes us harder.
Just to elaborate on this really quick, so I think it's a great thing to understand, like how exactly you see the crisis impact, and how your products also helps the customers to address this better. And perhaps also, Daniel, you could share as well, like in terms of what is the like how do you see your product and your company like also addressing, and how do you perceive the crisis from your perspective? So we have different side of the stories as well. So yeah.
All right, thank you, Karina. And Arad, it's quite fascinating. Thanks for that view on the US. My perspective is a little bit different because most of my involvement is actually with emerging markets. And what we do, what SuperSync does very simply, is we're essentially a financial institution for the lower middle class and the upper lower class, essentially the working class of Brazil, which is pretty huge country. And what we do is we make loans, mostly unsecured, and we're planning on launching accounts, deposit accounts. And so basically our perspective has been from a macroeconomic perspective. Brazil actually moved into crisis earlier than the rest of the world and is actually now reemerging, where the talk in the US is still higher for longer. In Brazil, the rate cuts have already begun. So you're seeing the unwinding of some of those very strict measures that were put to control inflation. And so obviously that also impacts demand. Now, in my experience, having run operations in many different countries, including Canada, Australia, China, Mexico, Brazil, typically demand for credit is positively correlated with GDP growth. So to the extent that growth has restarted, you should be seeing demand for credit actually accelerate somewhat. And there's obviously the demand and supply. To the extent that the price of a good gets cheaper, demand goes higher. So when the price of money goes down in terms of benchmark interest rates, demand goes up. So we're, I think, at least in Latin America in general and Brazil in specific, I think we're at the cusp of a new upleg of growth in terms of demand for credit. Now, in terms of the reasons for the crisis, I don't think I need to spend that much time dealing with it, just because I think they're, at this point, they're almost hypothetical or academic. Really, what matters is what's the status of things today and where do we go forward? And I think from this perspective, Brazil, which used to lag the US, actually leads the US to some extent.
Actually, it's great to hear that you both guys looks like you're very much advanced in helping the customers to actually cope with the crisis and with the cost of living. And it's great to hear that your products are helping to mitigate that as well. So I think if we move to the next slide, we'll probably I think that this is pretty much summarized that what we have looked at perhaps not touching so much the government policies, but I think it's kind of interesting to dive a little bit better, more in terms of the what kind of solutions you see in your companies, in your products, that you from the technological perspective that you see and you anticipate using more, let's say, so to help deal with the specifics of addressing the customer needs, if there is any. So I'm probably putting you a bit on the spot on this, but perhaps there is something you could share in terms of how you're elaborating that in your business.
Sure, happy to start. As we mentioned, when at the end of the day, you want to have that, you have to generate revenue, and you have cost, right? And the generate should be higher than the cost, which means the unit economics should work, because only that way you can scale and help more customers. And when you think about it at scale, it has to be with data and technology, and that's the only way to do it. So for example, we are right now, as I mentioned, active in more than 20,000 locations, and many of these locations are single store locations. When you go to the mechanic, when you go to the dentist, they're not part of chain, which means in order to sell to them, we needed to go and sell, and then to train the people over there. And it costs a lot of money, So you need to build it with data. Like, how do we go to the sale? How do we measure which store is working and which store is not working? Put a lot of machine learning and data into approaching to the sale. Then through underwriting the customer, which of course super important. Then servicing the customers. Then all running those operations. Put a lot of technology over this. Get feedback and get better. Is this vertical better than the other vertical? Is this state better than the other state in terms of sales, not in terms of underwriting, in terms of sales and ability to do it and focus over there? And with that, get better and better so we can approve more customers and work with more stores, but of course, with a positive margin because it's super important, not only now, but specifically now.
Right. Daniel, anything from your perspective in terms of how you foresee or see basically, what is kind of the survival strategies for you in the business? Let's name them this way.
Of course. I think that there's obviously the problems and solutions you've put on the slide, and in addition, I'll probably toss out another few considerations for founders and backers to consider as they look at the current state of the union. In addition to simply leveraging, I guess what I would start is first, before we dive into the specific tactics, I think that all of us need to stop and think for a second, what is my mission? And what is my vision to accomplish my mission? And so typically, if you know what you're doing, the solutions that you're going to come up with to deal with the problems that you're facing have some sort of a background with what you want to accomplish and how you want to go about it. In our case, we see, of course, that there is a lot of issues that our customers deal with, and also there's a lot of problems that the current players on the market around us experience as a result of the problems that you have. So I would say that from our perspective, we have three attributes, or we always build the business thinking about three things. First, profitability, because without profitability, you don't have sustainability. Second, scale, because without scale, you're simply not relevant in your market. And third, there is some sort of a social benefit. So when we went about thinking how to solve the problems that we're dealing with, there's a number of things. One is, for instance, in addition to what was put on the previous slide in terms of problems and solutions, I think every founder needs to have a mindset of getting to profitability. And the days of simply building something to flip it a couple of years later, that's done. Unless, of course, you're in the AI business. But assuming you're not, you really need to understand how to get to profitability, which, of course, runs either through revenues or expenses. I'm not sure technology on its own purely solves the revenue issue. But AI, for instance, is very helpful when it comes to reducing your cost structure. For instance, in our case, we've taken out a lot of the manual effort on first contact communication with the customer. We've replaced a lot of it with chatbots of different degrees. And of course, a big shout out to Leon and the Sphere team for being so helpful. But in any case, that can take a lot of cost out of the structure. And therefore, you can actually get to profitability quicker using AI, generative AI, whether it's ChatGPT, whether it's Anthropic, whether it's whatever you want. It doesn't matter. The point is, it's helpful. And the other thing that I would mention is that as a founder or as a general manager or CEO or what have you, you're always faced with when to ignore all this negative stuff propounded by negative Nellies out there saying, stop, close down the business, change the business. So most of the time, you just have to ignore all that stuff and execute. On the other hand, there always comes a time where you're better off listening. And as a founder, you need to know which is which. And that's probably one of the hardest things you're going to do as a founder. It's that judgment call. Most of the time, you just have to execute, but sometimes you have to listen. And to the extent that you know what you're doing, or especially if you don't, you're always better off surrounding yourself with your own little personal advisory board whose opinions you trust and who've already been there and done that.